On the stage as well. Welcome back to day 2 of BANCON 2013. I hope everybody's refreshed this morning. Yesterday we had a series of plenary sessions and panel discussions which saw a spate of insights and ideas being delivered by expert speakers and panelists. Moving on with the same spirit, we begin this morning's proceedings with the main plenary session of the day. The topic for the session is building capabilities to compete in the emerging environment. We have with us Mr. R.K. Dubey, Chairman and Managing Director, Canara Bank, who will be chairing the session. And the other panelists include Mr. M.S. Raghavan, Chairman and Managing Director, IDBI Bank, Mr. Hemant Contractor, Managing Director, State Bank of India, Mr. Stuart Milne, Chief Executive Officer, India, HSBC, Mr. C.V.R. Rajendran, Executive Director, Bank of Maharashtra, Mr. Rajesh Dahiya, President, Human Relations, Axis Bank, Mr. V. Vaidyanathan, Chairman and Managing Director, Capital First, and Mr. Hargopal, Senior Vice President and Global Head, Finacle Infosys. Also, we have with us Mr. Sasi Sankara, Principal, McKinsey & Company, who will be doing a theme presentation. And we will end this session with a question and answer session. Over to you, Mr. Dubey.
Good morning, friends, ladies and gentlemen. I am privileged that I am having an elite panel of very competent professionals in their own respective fields, from public sector, private sector, and other fields also, like technological partner, Infosys. Mr. Hargopal is there. So we would like to have first initially presentation from McKinsey. Mr. Sashi will make the presentation, then we'll start the discussion.
Thank you, Mr. Dubey. It's a privilege to be on this panel, and good morning all. In the short period now of 10 minutes, I will try to introduce the panel theme so that we can have a discussion following that. As I was coming this morning, reading the newspapers, I think the theme of the conference has been very strongly anchored everywhere as you read the papers. The bank of the future, as has been picked by Bank of India, seems to be quoted a lot. And of course, with the FM's comments yesterday around innovation and innovative banks getting new licenses, innovation is strongly in everybody's mind. Now, with that as the backdrop, what we as a panel will talk about is capabilities required to deliver innovation and capabilities required in the emerging scenario in banking in India. There will be essentially two broad themes I will cover. One around what are the capabilities required, and secondly around the HR framework that is essential. And around capabilities required, there are three things that I'll call out. One around how to develop superior customer proposition, especially for underserved segments. Second, the capability will be around surviving in a multi-channel world and driving a low-cost servicing model in that world. And third will be around the risk architecture, an agile and robust risk architecture. Let me just set these three things and all three capabilities and tell you why we think they're important. First of all, I think on the whole customer insights and proposition side, if you look at what the SME opportunity in this country holds, it requires a lot of innovation for that to be served profitably and served exhaustively. I'll share some facts with you. You may have seen some of this even in the report that was released yesterday, but that's again pointing to the need to innovate and to create capabilities on this front. Similarly, we live in a time where data is being rapidly generated and stored across many touch points with the customer, not just with banks, but also when customers do other things on the digital side. And this data allows for very rich innovation to happen and very innovative propositions to be designed. So there's one big theme around this that we should probably discuss in this panel. The second is, of course, the low-cost multi-channel architecture. We believe this is an important capability, especially in a world where everything is digital. Transaction intensity is growing dramatically with people finding it convenient to interact and therefore interacting more often. And I think this is another capability where not just by adding channels and adding cost, but making it in a way that you will drive down overall cost of servicing while keeping customers happy would be a theme where the second type of capability is required. Third is around the whole risk management side. We live in times when we are seeing elevated non-performing assets in the banking system. But in general also, as we come out of this down cycle, we have to build the systems and capabilities that would be required to ensure that we don't go through these events again, and that we have much better capabilities across underwriting, across monitoring, and around collections. And as we said, overarching across all of this will be the HR framework. Let me just take each one of them in turn and just lay out a little description of what I mean, so it is enough of a spark for a conversation later in the panel. As we think about it, I think we can always plot what the customer market value is and what's the customer's value with a bank. In this, you can see customers might be at very different points. Their market value may be high, and they may not have much with a particular bank, in which case they are, in some ways, people who should be managed or migrated more effectively towards your bank. Now, this is just a framework, but to do some of this would require a lot of understanding of specific customer, their wallets, their needs, and therefore how do you kind of give them the offers that will ensure that they bring a lot of their value to you. And when you think about this, this capability is going to be multi-layered. There's this, first of course, just for people to understand what source of value are they tapping. Are they trying to migrate people to an electronic channel to reduce cost, or are they going to offer innovative propositions to increase the revenue from that segment? Then you need to actually create an analytics ecosystem around it, capturing data on the customer and finding out how he transacts with you, how he interacts with you, and where are opportunities created for you to kind of tap that value. On top of that, then you need to kind of have heuristics and algorithms which are proprietary to each institution, which will ensure that what you offer as an institution when you see a particular pattern in the data is different from what others will do. And on top of that, there is, once these opportunities are spotted, you made the offer, the customer says yes, or customer says maybe call me later. There's a workflow that then channels that customer response to people who have to ultimately serve that customer, or even systems that ultimately need to serve that customer. And finally, on top of that, there is the whole thing about people who will have to use this data, this analytical capability, the workflow, and deliver to customers something different from what they are doing today. So it is going to be, any capability will be multi-layered and in some ways quite a meaningful thing to build, rather than just thinking about it as humans or just thinking about it as data or systems. So capability will be all of them together. Just on the same theme about unmet needs, when we did a survey of the SME segment, 65% of the SMEs said they didn't feel like the banks were serving their needs adequately, and therefore they were going to alternate players for their borrowing needs. And that is an indication of the opportunity to innovate, the opportunity to try and get more deeply into what those needs are and how you can serve them. And that's the role that this capability can play for you. just a quick illustration of, on the SME side, what could that look like? It would have a very granular understanding of the customer, which sector is the customer operating in, which geography, size of enterprise. They would have qualitative credit analytics done so that you combine that with quantitative models to create a superior insight into how this customer's borrowing needs are, what type of product might suit them. There will be cost-effective distribution using technology and other capabilities. There'll be coverage models that capture other opportunities that customer might have. An SME customer is also a wealth management customer. So if you can kind of offer that combined proposition, it may be more compelling and bring more value to the bank. And finally, in terms of the payments and servicing that happens to this customer, digital channels might be offered. And this comprehensive kind of offering will be quite different from what it is today and requires a very different capability to deliver. Let's then shift to the other theme that was highlighted up front around the whole low-cost multi-channel infrastructure. On this page, you can see how monthly usage across channels has been growing year on year. This is from a proprietary survey that we've conducted. And as you can see, ATMs kind of shown a big jump between 2007 and 11, and it's now plateauing out. But internet and mobile are still in the early stages of their revolution in terms of intensity of transaction, and we expect that to continue to grow. And if you see the right side of this page, the banks are at very different places in terms of how they've been able to respond to the shift in behavior at the customer end. And there's a quartile distribution there, and percent of customers of a bank active there. And from the survey that we've done, you can see while, for example, on ATMs, the top quartile banks, 73% of their customers use the ATM. Only 31% of the customers of a bottom quartile bank go to an ATM. And those other 69% customers are clogging the cash counters and clogging the branches and making it difficult to transact business in those branches. So huge variation, indicating that the capabilities are also across a wide spectrum and can be grown and improved. As you think about it, we see two different opportunities as you build your capabilities on the digital side. One is, of course, enrichment and enablement of current business models using all the digital technologies and digital channels that are coming available. And this could be both to kind of capture additional revenue, but also to reduce costs of servicing of these customers. And when you kind of look at the other side of the picture, there's also probably an opportunity to launch new digital customer propositions. These are ones that will meet the needs of the Gen Y. These are concepts that will be relevant to digitally savvy SMEs. And there is a breakout later today, and there is a whole gallery outside on digital where you can explore some of this theme. But there is going to be these opportunities, and the capabilities, again, required for these will be quite different from what we have today. Let's then explore the third theme around capabilities that was teed up. And this is about risk architecture, agility, and robustness. We all know we are living in heightened times of risk. As the numbers on the page on the left-hand side show, net NPAs are up, restructured advances are up. And the other interesting fact is, as we look at what happens in individual institutions, again, there's a wide spread. For example, on retail gross NPAs, between the top quartile bank and the bottom quartile bank, there is a 3.7x difference in terms of percentage of GNPA. On the SME side, it's even larger, the spread, with 4.8x between the top quartile and the bottom quartile. This, of course, partly indicates selection and business model, but also indicates that capabilities are quite different. And there is an opportunity here for everybody to kind of improve and move closer to the top quartile or the top 2 quartiles. And to do this, the capability building across the entire risk value chain will be quite extensive, and it will be around decision support tools, it will be around how you set strategy and policy, it will be around processes that you use to kind of do credit underwriting, it will be around governance, it will be around incentives, mindset, and culture that you have in the people. So it's going to be pretty exhaustive in terms of the dimensions across which capability have to be rewired. This is just some talking points on what is for credit underwriting process. But equally, I could say on workout, a lot of new capability would be required across each of those areas, and also on NPA recovery and management. So as you can see, it's a big agenda in terms of capability building for us to kind of get to a system which is better at managing risk and more agile at managing risk, and where the variations between the top tier and the bottom tier banks is not as big as we had seen on the earlier page. Finally, all of these 3 capabilities that I talked about have a theme of HR going underneath, because human capital is a big component of all those capabilities. And we all know that there is going to be shortfall in human capital, especially at the senior levels in public sector institutions. And this is something that we need to brace for, and this is again a reason to innovate, to ensure that this shortfall does not lead to capabilities being degraded. If anything, the innovation leads to you improving capabilities in spite of the shortfall. Equally, employee training has been stagnant in terms of the percent of on-roll staff that get trained in a particular year. And maybe therein lies a solution where you can kind of build more capability into existing people, and therefore make up for the shortfall that is likely to happen in very key roles. I think as we think about the human capital component of all the capabilities that we talked about, there will be several elements to reconsider around how you recruit and onboard and engage people, around how you performance manage the people, how do you kind of build skills on an ongoing basis and specialisms in the employees that you have. What is the leadership development paths and succession planning, and finally around organization structures. So with this, I would say I've kind of teed up all the themes, the 3 capabilities and the HR framework, and some questions are on the board, but I'll then hand over to you, Ms. Dubey.
Thank you, Shashi. You overshot the time, but you set the tone for the topic, a very exciting topic, building capabilities to compete in the emerging environment for having a bank of the future. The issue of banking, building capabilities has great significance, and this significance stems from liberalization of markets, privatization of ownership, globalization of the economy, and the sweeping changes in the post-crisis era. The banking sector is a miniature model of the economy, it is said, and the case for building capabilities has to be placed in a proper historical and comparative perspective. The basic issues need to be identified against this broad canvas of growth, modernization, and distributive equity. The second generation economic reform entailed a paradigm shift from crisis to consensus. But the placing of banks on a higher and more sustainable growth path requires banks to expand and diversify. Banks must meet the constantly rising service expectations of their clients in the emerging environment. Competition remains tough, and the pace and scale of regulation, both nationally and internationally, is continuing globally. Competition and Basel III would alter Indian banking with transformed risk management, loan pricing, capital efficiency, operational efficiency. The format of the panel would be like this, that we'll have around 5 minutes from each distinguished panelist, opening remarks including answer of a question if I pose, and then after 4 speakers, If you wish, we can have a rapid round of question answers for 10 minutes so that you don't have to wait up to the end. Then the remaining speakers, and then in the end we'll have again question answer. Now I have Mr. M.S. Raghavan, the distinguished chairman, managing director of IDBI Bank with me. This is a bank where he has more challenges and a different set of challenges because the DFI turned bank. A totally different challenges, how he faces that, including a question that he may address. Why should banks try to innovate? He needs to innovate a lot, especially now to become a bank of the future. Mr. Raghavan.
Thank you, Mr. Dubey. Distinguished panelists, and ladies and gentlemen. Why should we innovate? The models which we had been adopting in the past, which stood in good stead with us in the past, may not be just enough. The capabilities that we have cultivated may not be just enough in taking us into the future. There are ever so many challenges which are to be surmounted by the banking industry in the days to come, especially by the banking industry and more specific to IDBI. In India, loan to GDP ratio is close to 56%, whereas internationally it is more than 150, 160%. So what we are seeing is a tremendous potential to grow into the future. And it's said that the mortgage book is going to swell to 70 trillion by 2020. And some of the figures are 45% of the population is still excluded. They are resorting to informal channels for their credit requirements. SME 65% are still not in banking channels. Rural, though 70% of the population is in rural, banks have only 29% of the branches in rural, and 15% of the retail deposits are only from rural. So we have enormous prospects to prosper into the rural segment. In effect, cost of intermediation is very high in India. It's 4.1% in 2013. And making allowances for the statutory preemptions like SLR, CRR, the priority sector lending, etc., still it is high. There is a tremendous scope for improvement going forward. The whole, the efficiency has to be improved. The branch model, which stood in good stead with us for over 50, 60 years for the nationalized banks, will not be enough. It's a very high-cost model. When we are going to cover people across the country, it is going to be a burden. So it's imperative that the high-cost model is shed in favor of electronic and the peripheral banking channels to ensure that the cost structure is reduced to a very great extent. And the greatest challenge is the demographic profile of the customers. The demographic profile of the customers, the empowerment of the Gen Y, has changed the entire landscape for the banking. The people who are going to be more than 50% in the electronic channels or in the social networks, how are we going to address them? Are we going to address them with the traditional channels? Probably this is not. So the risk, if you see, because of the opening up of the economy, we saw the tumultuous period that we went through and the rupee depreciation we went through. So these are tremendously challenging times for the banking industry. The risk is all pervasive. Risk comes from abroad. So with this risk in place, we need to have a thorough risk management, the infrastructure in place. We still have about 12% of the household savings still held in cash. There is an absolute need for us to tap these resources, which is of immense importance for the banking industry in the days to come. With our forays, with the nationalized banks' forays into infrastructure space, there is a tremendous ALM mismatch which we are facing. And come to Basel III, we are going to have year on year at 20% growth. We are going to have a capital, the common equity capital requirement of 1.6% of the risk-weighted assets we require as capital year on year. While we are aiming at 1% risk, the ROA, 0.8% going to accrue to the capital, we still have 0.8% shortage year on year for every bank in the days to come. These are all challenging times. To meet challenging times, it is imperative that we also innovate and increase our capabilities to ensure that we are abreast of the developments. This is the thing. Thank you very much.
Thank you, Mr. Raghavan. My friend Mr. Raghavan finds enormous prospects in the rural area and would like to tap them. Challenges of risk management, capital need be there. In view of the cost structure, he would prefer an electronic model to the branch model for future bank of the future. Now I have with me Mr. Stuart, the CEO of HSBC India Operations. To my left, when in the pre-panel discussion, he was mentioning very lightly, for 10 years he has not visited a branch. That conveys a lot of message. I would like him to address the issue of challenges to be faced in the next 5 years and how he proposes to handle them, especially the experience of global markets and of that of China. Mr. Stuart.
Mr. Dubey, thank you very much, and good morning, everyone. Clearly, there are massive challenges, as the panelists have already alluded to. In particular, the demands of society on banks, the demands of our customers rapidly changing, and the demands of our regulators and our shareholders. Somehow, we as banks have to bridge all of these. I've been in banking, like many of our panelists, for more than 30 years, and there's no doubt that the speed of change today is much more rapid than it ever has been in the past. One of the key things that I see over the next 5 years is that capital is going to become more scarce. That's to say, we have to hold more capital on our balance sheets because of regulatory pressure, and therefore we have to figure out how we can generate a reasonable level of return on that capital to meet the expectation of shareholders, whether it's government or private shareholders. In that connection, I do believe that this question of risk management is absolutely critical. And indeed, if you look at what happened in China over the last 15 years or so, it's an interesting story. You know, what the Chinese government decided to do was to invite in international banks into the share capital of some of the key banks in China. So, for example, HSBC took 20% shareholding in Bank of Communications, which is the 5th largest bank in China, very large institution. Now, the important thing for the Chinese side was not so much the capital, because they have plenty of capital. The much more important thing was the technology transfer agreement that we signed with Bank of Communications. So that is giving them all sorts of technology. I don't mean the sort of Infosys style of technology. I mean more the question of, you know, how do we manage a bank? How do you manage an international bank? How do you manage risk? How do you manage your capital? How do you look at returns? All these sorts of things, that kind of technology. And this was much more important for the Chinese government to get access to that. So they use that as a way to kickstart the modernization of the banking system, the state-owned banks. One of our senior executives and our chief risk officer for Asia was recruited by Bank of China to be their chief risk officer. So they actually went outside the bank and outside of China to bring in an individual who happened to be an American citizen into the Bank of China on their board as chief risk officer. That's a very dramatic move. And it really indicated that they needed to get that step up and prepare for the future by modernizing their risk management systems. If I can just say a word on international banks like ours and the challenges we're facing for the next 5 years, it's maybe a little bit different. And you know, we have 3 key priorities in HSBC. One is to grow the revenue. The second is to introduce global standards. That's to say, the way we do something in India should be the same way we do it in Thailand or in Brazil or in the United Kingdom. And the third thing is to simplify the firm, to make things simpler, to make it simpler for our customers to do business. We have something like 7,000 systems, IT systems in HSBC today. we would like to have more like 70, just to make things simpler, to make the firm easier to manage, and to make the customer experience better. And this is very much in line also with what our regulators want to see. This question of resolution of globally important, globally systemically important financial institutions is very high on the agenda. So this question of how do we simplify the firm is very much there as a key priority for us.
Thank you, Stuart. In fact, I would thank both the speakers for keeping up the time. I was just monitoring. I am very happy. He also says the same issues of capital challenge, the scarce capital, the risk management, and the China story, how China invited large foreign banks to take equity or the share in those banks, a different way of handling the things. So the challenges are bringing innovation, technology transfer agreement. It is something for us also here to think about that. For international banks, the key thing that he told was simplifying the thing besides revenue and bringing the global standard. Thank you, Stuart, for bringing new insight into that. Now we have the veteran, Mr. Hemant, contractor, the managing director of the largest bank of India, State Bank of India. From his rich experience, we would like what innovation, what he has up his sleeves. Mr. Hemant, contractor.
Thank you, Mr. Dubey, for the very kind introduction, and a very good morning to everybody. In this time of 5 minutes which has been given to us, in my talk, I'll cover about the various developments in the environment, the emerging environment that we are talking about here, which is the subject of the discussion. The implications of the various factors, the various developments, both in India and internationally, the implications for the banking system, and lastly, I'll cover the implications in terms of building capabilities by the banks concerned. Now, if you look at the environment today, the emerging factors in the environment, both domestically and internationally. Now, what we find is that in the domestic situation, we are faced with a situation where the economic growth has slowed down, where the GDP has slowed down to just about 5% or so, where we are in a regime of slightly higher interest rates. The currency has weakened. And apart from these macroeconomic factors, we have this issue of very strict regulatory norms being applied now. The regulatory norms are becoming stricter by the day. So these are some of the domestic issues which have come to the fore in the last few years. Now, internationally, the factors, the developments which impinge on the Indian banking sector are the immediate issue of the tapering off of the quantitative easing by the USA, which has implications for banks, not only in USA, but banks operating all over the world, in terms of the higher interest rates that are likely to follow as a result of the tapering off. And also the fact that internationally this has been a period of slow growth for most economies, which again poses challenges for the Indian economy as well, because we have opened up in the last decade or so, and we are now a much more open economy in terms of the trade that we do with the rest of the world. So these developments, both domestically and externally, have implications not just for the economy, but for the banking sector in India. And what are the implications? The implications are that the slow growth and the fact that interest rates are high, the currency is weak, would mean that the margins of banks, the spreads and the margins of banks have come under a lot of pressure. And it would be very difficult to keep up with the kind of ROEs that we were used to seeing in the past, ROEs of 15 and 16%, which we're used to seeing not too long ago. So this is going to become a bit of a challenge, especially so in the light of the fact that the new regulatory requirements, which impose stiff capital norms, require banks to maintain much higher capital than they used to. So combined with the fact that the competitive pressures are growing, the economy is slowed down, and the capital requirements of banks has gone up, the pressure on margins, pressure on banks to maintain margins is going to get higher by the day. So this is one of the challenges which banks are facing these days. and the fact that the currency has been depreciating, interest rates are high. All these things also pose a lot of risk to the banking system in terms of increased credit losses, increased mark-to-market losses and things like that. So these are some of the implications of the developments both domestically and externally on the Indian banking system. Now, what do banks need to do to cope with these challenges so that they come out winners? Now, what the banks would need to do is to build up capabilities to handle these challenges which have come up. Now, for example, I mentioned about the fact that growth has slowed down. While the growth has slowed down in the economy, there are still a lot of sectors where banks can grow. And one of the challenges would be to find these sectors where banks can grow. The sectors which readily come to mind are the rural sector, the financial inclusion, which is a major initiative of the government, and where the banks have made a lot of progress, clearly holds out a lot of promise for growth for banks. Then, on account of the fact that the currency has been depreciating, exports is another area where banks can definitely do a lot more, especially so in the light of the fact that the MSME sector, which a reference was made in the presentation, holds out a lot of promise because, as we know, the SME sector accounts for almost 40% of the country's exports. And clearly with the currency depreciating, I think there's a lot of promise here, a lot of potential for banks to help the SME sector. And we need to build up capabilities to handle the SME sector. Of course, banks have been doing that, but this needs to be given a lot more sharper focus than hitherto, so that we are able to capitalize on this opportunity which has come up. Then the other thing the other area that we really need to build our skills in is in risk management. Because as I mentioned, our margins are under pressure. There is very little room for error here. We need to keep our costs low. We need to keep, especially our credit costs low. We need to keep our operating expenses low. And the challenge really will be to build up risk management capabilities within the banks, so that credit losses are kept to the minimum, so that the banks are able to earn a decent return. And also build in more efficiencies so that we are able to keep our operating expenses low. So this has implications for not just risk management, but it has implications in terms of the HR involved, in terms of the IT involved, in terms of our processes and systems. So we need to beef up our capabilities in all these sectors. So to sum up, I would say that to cope with the emerging environment, we need to build up capabilities in risk management, capabilities in marketing, in tapping the potential which exists in these areas that I mentioned about, and also in beefing up our HR and IT processes and systems. So I'll end here. Thank you.
Thank you, Mr. Hemant. Shri Hemant in SBI would like to improve the capabilities of risk management, marketing, HR, IT, exports capability, the MSME sector, to keep the operational expenses low, to protect margin, having challenging growth and the capital requirement. Well, now have another public sector banker, Mr. Rajendran, Executive Director, Bank of Maharashtra. I would like him to address the issue of what capabilities should banks build to be profitably serve undeserved segments, improving cost efficiency and manage risks.
See, all the projects which we are funding, we always ask for what is the payback period for you. None of the projects which we implement in the bank, we never ask for this payback period. None of us know what is the payback period for your CBA solution. What is the payback period for the technology investments we have made so far? So these are all, first thing, if you remember why technology has come into bank, it's not because of the felt requirement. It is because of the CVC's direction. Okay. Mostly it was a compliance function than of a business requirement. So we spent thousands of crores on technology without realizing the benefits out of it. It was substituted my back office functions to a large extent. It has released my staff to a large extent, but it has not created the excitement which is supposed to be there on the customer mind. You look at the telecommunication section, the technology, what has made to the telecommunication sector. Well, it started with the 16 rupees per minute. Today they talk about few paisas per minute. To that extent, technology was able to cut down the cost in the telecommunication. Our technology is not able to cut down the cost. That is why we are not able to go to the rural market, because the ticket size is very small. The servicing becomes very, very costlier for us. If you want to have a recharge for your cell phone today, for 10 rupees it is possible, because transaction cost is so low. Still it is more profitable for the companies. But our transaction cost is so high, accessing the rural markets becoming very difficult for us. It is an obligation today. It is not a business proposition as on date, mainly because we don't have a model to access this. Of course, there are a lot of models being evolved, and I'm sure that we will arrive at a model. I've seen this business correspondent model, which is coming up in the market, with the micro ATM today, which is available to us. That appears to be the only solution, which may be in a position to take care of this, the last mile of the customer with an affordable cost. See, when a customer comes to the branch, it costs us 45 rupees per transaction. If he goes to the ATM, it costs around 15 to 20 rupees per transaction. If he goes to the internet, probably it costs 30 paisa per transaction for ICICI Bank, maybe 3 rupees for me in my bank because of my lesser volumes. Instead, if the customer goes to the POS machine, it is not a cost, it becomes a profit for me. So why don't you shift the customer directly from the branch network to the POS machine? We are not able to do that. If he goes to the POS, I get a commission from my MDR commission is coming to me. Instead of being a cost center, he will become a profit center. Only thing is we don't have that kind of a POS machines available in the market. Our card penetration is low, our educating the customer is low. Mr. Raghavan was making a mention, about 12 lakh crores is the money which is lying in the form of cash, physical cash. If this 12 lakh, even 50% comes into the system, all of us will grow at least double the growth rate which we are doing today. Only thing is how to educate the people, how to relieve them from the cash economy, how to make plastic popular, how to make this every transaction a profitable transaction for me. If a telecommunication can make profit out of a 10 rupee transaction, why I'm not able to make profit out of a 100 rupees transaction? That is one thing which you have to address. How to take the technology to that extent like telecommunication, making the transaction cost so low so that we will be in a position to serve the last mile customer also. That will be the challenge which you have to address in the days to come.
Thank you, Mr. Rajendran. He would adopt the BC model, the micro ATM, and would like to popularize the POS terminal, the plastic culture, reducing the cash culture, and educating the customers. I think in the new time, the financial literacy is also going to be very, very important. Educating the customers, what is good for them. Well, now I have Mr. Rajesh Dahiya to my right, the end, from Axis Bank, the expert of HR. What exactly he has up his sleeves. All these capabilities which my friends have suggested are really to be done by the people, the bank employees, the bank executives, which is again, talent gaps are coming, how we are going to address, how we are going to innovate on that area. Mr. Rajesh Dahiya, Axis Bank.
Thank you, Mr. Dubey. Good morning, friends. I'll briefly touch upon two aspects of human capability challenge in the new world, as we call it, emerging environment. So one of the capability challenge we'll have to play in the marketplace. The capability that we are seeking in the banking industry today is largely coming from technology space at one end, retail at other end, because the kind of products that we today have to deal with, retail capability is something that we need to look on. And most importantly, the competing platforms who tomorrow can provide the same services that the banking has been providing. So telecom is one example. It can be any other thing that we can think in future. So when we build capability for future, for banking industry, we cannot ignore the capability that lies in other industries, and the option to us will be, one, partner with those capabilities, whether that's through outsourcing model or partnership model, or many a times we'll have to acquire those capabilities. And that's one big challenge in terms of mindset. In private sector banks also today, 80 to 85% of our hiring is at the ground level, junior level. We still have not matured at acquiring large capabilities at lateral levels, and that's something we need to now get used to. Second aspect of human capability is engaging with the people, human capital in the banks, in the companies, in the organizations. And that's again, when I use the new word, the terms of engagement, if I can say, are changing today in the new word. Historically, we had aspirations which were designed around growth in a structured long-term manner, and people used to work for the brand of the bank. More and more, as we see today, our employees are asking for brand of the employee. What happens to me when I stay in an organization? So how much of investment we will be making in these people, creating capabilities of our employees so that in the marketplace today, they are able to get their pride, get their own aspirations that they require to be fulfilling for their own aspirations. So our entire HR processes, right from hiring, need to be now talking a different language. I'll give you one small example. So historically, all of us, as employees grow, one stage comes when employees start getting a car as a perquisite. And that's a status that most of us in our life have acquired one day. I had a recent case of a very senior employee of my bank who asked me a question that, Rajesh, why do you give a car? I want to buy a motorcycle. Will the company offer me a motorcycle as a perquisite? So these are the kind of employees we're dealing with, whose expectations, rewards, appreciation is totally modern, and how quickly we can evolve with those mindset, both in terms of our policies, in terms of our practices. That's a challenge we have to look in the new world. Thank you.
Well said, Mr. Rajesh. How quickly we evolve to change the mindset, and even at the senior level, whether a car is required or a motorcycle, a decision has to be taken, how one takes it. Well, audience, would you like to have a rapid fire of question answer, 5 questions, then we go to our 2 speakers, or we finish the, any 5 questions. Mike, please, 3rd row.
Sir, this is Dhananjay Bapat from, sir, here at your extreme. Sir, this is Dhananjay Bapat from NIBM. Sir, first of all, I am really benefited by the expert panelists which we have on SME. I have a question. What I would like to reflect on your views on the customer life cycle and the role of business model and innovation across the customer life cycle. I mean, the context of the bank of the future.
See, the ultimate aim of the customer service today is to capture the customer's lifetime value. This, we have, as a matter of compliance, all our banks have gone for core banking, and even at 53% of electronic banking usage, we are capturing tons of data. And we do not have the capability to analyze this, and we have not topped ourselves with a CRM to attend to this. In effect, it takes 4 times the energy and 4 times the effort and 4 times the cost to acquire a new customer than to deepen the relationship with the existing customer. So having said this, we are not optimizing the wallet share of our customers. So it should be the endeavor of the banks to ensure that the wallet share, we dip deep into the wallet of the customers and capture the wallet share. Perhaps this is going to be the cutting edge for the banks in the days to come.
Sir, on your left side.
Mike, please here.
Yeah.
Please.
We are talking of reducing the cost by moving from the brick and mortar branches to a more digital approach. We are talking of internet. We are talking of using mobile banking facilities for that. So when we are talking of these things, we are trying to address the rich and the rich affluent segment maybe. But for the mass market segment, we may still have to have more and more brick and mortar branches. So are we talking of 2-tier strategy wherein we are saying that for the rich affluent, we'll follow the strategy 1, where we'll be talking of moving from brick and mortar branches to digitalization. And for the mass market, we'll be trying to have more and more brick and mortar branches initially, and then try to move towards the digitalization. Thank you, sir.
Respond.
Yeah, Yeah, the model that that is currently employed by most banks in India is to have this kind of a dual approach to expansion in these areas. So, the banks are using these digital forms of accessing customers in remote areas, but at the same time, they've not given up on the brick and mortar branch models. So you'll find that typically in these relatively unbanked areas, in the rural areas, you'll find new branches coming up. In fact, that's a requirement also. In terms of the regulatory guidelines, to expand both by way of branches and also, to employ other models of reaching out to customers like the business correspondents and things like that. So a variety of measures are adopted to reach out to customers who are living in remote and currently unbanked areas. So it's a multiplicity of approaches, channels. Yes. Yeah.
Well, we would never abandon opening up brick and mortar branches. These are various options to extend our reach. It's still more than 6 lakhs villages. We don't have a bank branch. Yes, Rajendra.
Yeah. So I represent a Ham Admi Ka bank. Okay. So I have a large number of pensioners in Maharashtra. Say about 8 lakh pensioners are dealing with me. On any pension day, I get about 100 people. Okay. So when I'm dealing with these pension people, the high net worth individuals is frightened to come into my any branch network. You take Punjab National Bank, Padai Road branch, even before the branch is open, there is 100 people standing out for remitting money to Bihar in Padai Road branch. So we have not driven the customer out of the brick and mortar. Within the brick and mortar also, can you find a cheaper solution? We have found a solution. We have put the BCs in one of my Vishwandwadi Pune Polke, there is a branch, where we have put in 3 BCs on a pension day. These are all micro ATMs operated with fingerprints. Okay, these guys are coming within the branch itself. There is a separate counter for these guys. They come and operate the micro ATM. Cash management becomes easier. So instead of being serviced by my regular staff, they are being serviced by the BCs. That makes the BC model more viable, and it serves the purpose of brick and mortar service also. So you can find solution within the brick and mortar structure also, which can be affordable.
Yeah, there is no doubt that branches are an important medium for reaching customers, at least for the first time and so on. But the lower middle class or even the poor are actually catching on to the mobile technology-based banking much faster than you might imagine. In fact, there are many times significant benefits of staying in the mobile platform for them as compared to even the branch structure. Because when the customer comes to the branch, the average teller or the average employee of the branch tends to look at the profile of the customer. Then he says he's wearing a chappal, he looks poor, then he treats him differently. When somebody is wearing suited, booted, he comes there differently, he treats him differently. In fact, an ATM does not know whether this customer is rich or poor. It serves him. Yeah. Right? And similarly, an internet does not know this customer is rich or poor. It serves him. In fact, they say that the best way to address the caste system in India, is economic growth, because when people become economic growth, then they forget who's what caste. And the best way to eliminate this concept of socio-economic, economic class, the rich and the poor, is the root of technology.
Raghavan wants to say something. Good.
It's a part of a continuing dialogue, whether this the brick and mortar banks are going to be irrelevant in future. This is a continuous dialogue that is going on. But in our opinion, the brick and mortar banks are not going to be extinct at all. Even we have seen in advanced economies where 100% of the transactions have moved to electronic form. Brick and mortar banks have not become irrelevant. Even if you see, we have a statistics that 83% of the customers still go to branches in all banks. The way they are using, they are going to nationalized banks in India to transact, whereas they go for counseling to get counseled. They go to the branches of foreign banks. So it is not going to be extinct. The model is going to be a hybrid model, wherever the electronic models are. And again, I'm going to differ with you when you say that it is going to be a rich person's model. Nowadays, the mobile banking platform is available to all and sundry. Even the basic rudimentary models are having the facility of GPRS in mobiles. So we should not think that it is a rich man's model. Probably that is perhaps going to be the delivery channel of the future.
Thank you. Thank you for your good question. It engaged good attention. In fact, I wanted to engage audience also. Now I'll go to my sixth speaker, Mr. V. Vaidyanathan, rich, experienced person. Earlier worked for 10 years in Citibank, 10 years in ICICI Bank. Now he's running his own company, Capital Fast. Mr. Vaidyanathan, I would like to reflect you on two questions. In your experience of different areas of banking and finance, what are the big challenges coming the way of putting banks in next 5 years? Second, when both private banks and public sector banks are operating in the same economy, why is the NPA of PSBs so high in comparison to private and foreign banks?
Extremely good questions. Thank you for that. When we step back and see what is happening to the Indian banking system, and if we pick from the various pieces of developments happening over the last 5 years, we see two significant developments. One, in the recent past, the Reserve Bank is saying that if foreign banks subsidiarize, you can practically have unlimited branches because you're a local bank practically. And Stuart, I would actually say that don't miss the opportunity. It'll never come back again. And if you believe in India in the next 50, 100 years, which you should, you shouldn't, you have a big gold mine to reap here. But foreign banks will come here and open maybe 1,000, 2,000 branches if they really believe in the future, and I think they will. Private banks now de-license from branches, and you will see that over the next 5 years, 10 years, they will open another 15, 20,000 branches. Equally, new private sector banks are coming up in the next round and later on tap, and you will see maybe 10, 15 of them coming, and they will come and take away a portion of the banking system which traditionally has been served by, and almost so-called reserved for the public sector. So the public sector said, okay, the rich class, let the foreign banks do it. The emerging middle, upper rich, okay, public sector walked away with it. Now step back and see the poor and inclusive class, the new private sector banks, the NBFCs who have a great penetration, they will walk away. Then you will see all segments are going away. I'm not scaring you, but please take my comment seriously. Every single segment is systematically going away. And therefore, what are we doing to make sure that we come back in this game and address this challenge is something very serious to think about. The other important thing to think about is what are the extraordinary strengths of the public sector system today that can take us and win us back or give us a significant edge in this game. I have found from my experience, and I work very, very closely with public sector banks now, and let me say that they are extraordinarily humble, they really connect, they really care for the customer, and in fact my experience is that they are changing. But the change is of course very important. They are changing. I'm seeing it in the last 5 years. I'm seeing it. I've become a big fan actually of the PSC system because of my experience. My sense is that if in this process the public sector banking system changes, we will take advantage of it. If it does not, then there is a set of let me say, a problem coming. The third thing is, when we see the changes in the overall environment, we are seeing that India's average age in 2020 will become 29. China's average age in 2020 will be 39. Japan's average age in 2020 will be 49. If the whole country is becoming young, but the average age of employees stays where it is, then there will be a fundamental mismatch between the employee and the customer. And employee is not age of the employee. Age of the employee affects the way they think, the way you use social network, the way they use Facebook, the way they will do internet. Everything is changing. And therefore, when I saw the news yesterday that, so much substantial portion of the system is retiring over a period of time, honestly, it is shocking, but I did not see it as a huge, something to cry about. In fact, some change is good, and I think a fresh will come. Equally, at the same time, I feel that the senior management is retiring rather fast. A chairman retiring at 59, the peak of the performance, really the peak of the performance when they're. So maybe at a senior leadership level, there needs to be some changes to do that. But coming back to the core issue, you see what's happening therefore. New players coming, sector changing, and even though the sector is not, the banks are not being privatized, the sector is privatizing. Think about it. We could not privatize MTNL, BSNL. But bringing Airtel, Idea, everybody, the sector is privatized. We could not privatize Air India, Indian Airlines. But by bringing Indigo, Jet Airways, everybody, the sector is privatized. So surely by surely, whether we like it or not, the banks may not be privatized. You may have security of job, but the sector is getting privatized. And this is very, very important to note. Lastly, apart from these four things, another significant change that is coming is that there is deregulation happening. Earlier, at least, we had one comfort that, okay, CASA is, savings account is 4%, CASA is 0, right? Now, new players are coming, savings account is deregulated. People like Yes Bank are growing at maybe 40%, 50% savings accounts. Tomorrow, who knows that current accounts gets deregulated. And then you will see new players coming, sector changing, sector deregulated, foreign banks coming, and there is one change coming. There is a beautiful book I recommend every one of you to read if you get your hand on it. It is called Our Iceberg is Melting. It's a story about how penguins are on an island and the iceberg is melting and how they deal with the change. They deal with it brilliantly. And I'm very confident that with the changes we will talk about today in terms of what technology we can do, what technological changes we can do, I tell you there are significant strengths. Every big bank, foreign bank, public sector bank we talk about, I'm a big fan, has 30, 40 million customers. They are tremendous relationships. I mean, it goes beyond for generations. How we can take advantage of this extraordinary penetration in the country and change with the times is going to define the future of the public sector banks.
Thank you, Mr. Vaidyanathan. Thanks for the compliment to public sector bank that they have been changing. You found them changing. They are really changing. Don't worry, the seniors are retiring. The average age of the country changing down. Average age of banks are also coming down. In the banks, public sector banks, Mr. Rajan, the average age of the banks was close to 52 3 years ago. It has come down to 45. In some banks, it has come down to 40 or below. So, yeah, 33.
Congratulations, so, congratulations.
So it is improving. We are all conscious of the change, the transformation that took place in technology and related things in the last 2 decades. Your comment regarding addressing those cost and other issues through electronic platform, they are really to be taken note by the powers that be. Well, now I kept one gentleman, away from the limelight, Mr. Hargopal, my old friend, the technology expert, the senior vice president and global head, Finacle Infosys, who brought CBS into the country in PNB earlier, the first public sector bank to have gone, where I worked 10, 15 years ago. And he would be talking to you on digital Gen Y banking and also the global innovative banking trends. Mr. Hargopal.
Thank you, Mr. Dubey, and good morning, everyone. I think lots of these are pretty much covered by Mr. Vaidyanathan, Mr. Raghavan. Last week, I was speaking at Retail Delivery Summit in Denver, and there were bankers right from Japan, Korea, and Americans. And I was talking to the CEO of a community bank. I said, what are your key challenges? He said, you know what? The consumers which today I'm supposed to be dealing with, I don't know what they want. So today, for the past 20 years, I've been working continuously with the 20-year something. My average age in my company where I work is predominantly in the 26 to 29 background. And when I talk to them, try to understand how well they are engaged by their banks, they are not. Irrespective of whatever relationships they have, the engagement part, in fact, that actually prompted us to do a survey with our global employee workforce in that age group and say, what are the attributes of the so-called digital natives or the Gen Y customers? Why do we need to know? Today, in India, like Mr. Vaidyanathan talked about, the average age being what it is, 29 by 2020. Today, we have half the population in India less than 25. And these are the ones who have the ability to spend, and those are the ones which are going to grow. So when we did this survey, a few things came about. Number one, they, first and foremost, this is a fundamental shift as you look at, their loyalty factor is the lowest. They do not mind switching the relationship, if your next transaction is not in tune with that. Second, their price discovery mechanisms are very different. They are very, very, very well connected in the community, whether you call the social networking or whatever it is. And before they buy an iPhone 5, they know where they can get that in a few cents less. Third, they want, in terms of no matter the relationship size, they want a segment of one. You need to understand me and what time do I need to be connected with, and you need to be engaged. And contrary, in fact, this came as a surprise, contrary to our belief that they always want to be served on the digital channel, actually they want the high touch as well. When they get into their investment, that small money they want to invest, they would like to ask questions. So the high tech and the high touch is important for them. So when we looked at, and the last one is, they say that, you know what, you try to understand my funding side, but you don't understand my spending side. What my spend patterns are, and try to create the offers for me, tailor the offers for me in tune with my spend pattern. Today, 90% or more of my spend is completely visible to you. I use the credit card, I use electronic fund transfer, I do online payment, I do maybe the digital wallet. There is a trace. And don't give me offers on jewelry, don't give me offers on some other travel accessories, give me on the books, give me on the my movies, give me on my sporting events, etc. So essentially, trying to understand, in fact, that's what Mr. Raghavan was talking about on the know your customer beyond the life cycle of the, signing up the customer, onboarding, all through the life, their spend pattern, etc., then you can really mine that relationship very well. So here, in terms of the customer, when we looked at today's customer, I'm just looking at this average age group, and for me, the age group is not the one. In fact, I would like to differ slightly with my other panelists. It's again in the mind. I have seen much more savvier digital converts than the digital natives themselves. In fact, they swing the pendulum the other end, they do, completely on the other channels, etc. So, essentially, today's customer is more informed than ever, more connected than ever, more sophisticated than ever. And how are you designing, whatever, it's not just the design of the products, etc., but your entire experience part of it. How are we designing is the key question that begs answer. But having said, globally, when we look at, in fact, we do this innovation survey along with the EFMA, European Financial Management Association, for the past 5 years, from 2009. There were some interesting trends we looked at. First of all, the good news is, when we look at a geo window, this is by poll of CEOs and CXOs of the banks across 6 continents. The banks in Asia, 95% of the respondents said, look, I'm going to spend more on innovation this year than last year. And that 95%, the equivalent of that in the US is 73, in Middle East and Africa 80, and Europe 58. So in fact, globally, whenever we are engaged in various forums in international community, they are looking at Asia as the hotbed of innovation. And when they look at innovation, they are not. In fact, they talk in exactly what I'm saying now. It is not about putting the lipstick on the pig. It's not about the cosmetic innovation, but the core innovation. And in fact, the amount of adulation all of you, the bankers in India, you get outside is tremendous. Because what the Indian context, what we look at, if you look at the innovation, one is that the fortification of the inside, that is have a robust system to do the processes and in a very robust manner, and then differentiation on the outside. And the inner one is a lot bigger task. And today, you do not have any example anywhere in the world where in a window of a decade, the entire banking system has retransformed or repurposed their internal systems to suit the growth and suit the agility and the robustness. And today, you are able to handle the kind of volumes which you are doing because of that. But the next part is, this is the bigger part of the innovation. But the second one, that's what the differentiation on the front, where you are managing the customer experience. Today, what are they looking at? A customer, if let us say, I go and tell to my relationship manager, my daughter is going to Stanford for summer school. This is a casual conversation. There are at least 3 sales points for that. Number one, this guy has a daughter who is going to university or a school, which means actually I can sell certain insurance products. Then she's going overseas, I can send some currency and travel part of it. And she's going to university, so I can sell student loan. So how do we capture those conversations and create sales opportunities for our frontline staff? Today, apart from the digital experience for the consumers, essentially transforming the frontline staff to be savvy, to look at these, spot the opportunities in the social interaction is extremely important. So I think overall, if we really look at from the Indian context, from a digital interventions point of view, I think the big ones are done. In terms of the fortification of the core, more or less, all the banks are predominantly done on that. But the issue here is, how do we leverage, in fact, like one of the panelists said, how do we leverage that better in terms of all that wealth of knowledge, what we have with us, to really serve them and look at their spend side. That's where we need to really look at how can we encourage them to use a card or a digital wallet wherein you have a track of their spend so that you can really bring in your intervention in terms of your offers as well as your products to them. So I would reckon, I think that is where the challenge is.
Thank you, Hargopal. Very well said. The present day customer is more informed, more connected, more sophisticated, which brings the necessity of more innovation by the banks and focus on customer centricity with updated products, updated services. Would you want to say anything? Otherwise, questions. Now, the floor is open. Please circulate the mic.
Hello.
Hello.
Good morning. Good morning.
Thanks for the opportunity given. I'm an ex-RBite. The panelists have highlighted the approach, innovation, and reaching the need for low-cost expansion. Mr. Raghavan has suggested that. And knowing the structure of the rural market, the heterogeneity of the market, and how you get into the market, how you are going to understand the credibility or the creditworthiness of the customers, and how you meet the heterogeneous needs of the rural market, and need for the low-cost technology vis-a-vis the brick-and-mortar model. All these things you have talked about, and my question is, in the context of the retail segment getting technologically expanded, there is an organization that has come up. You banks have formed a National Payment Corporation of India, which is taking care of the ATM network and POS network and centralized opportunity. The main thing is building. Do we think of building a centralized organization which will look into the operationalization standards of this expansion into the rural segment, which will meet the need for the mass market? This is my question. Centralized organization, which will look into the standardization of the operation.
Yeah, the centralization is being considered with NPCI, but then your question is not clear. You made a big background.
Yeah, my question is...
Focus question, nothing else.
My question is, NPCI has been constituted with the view to take care of standardization in the ATM network, POS network, etc. Similar to that, now we are looking at an innovative banking which will go into the rural segment. We are meeting the mass market, which is already heterogeneous, which we are not very clearly aware. And in that context, the implementation of all these projects by multiple banks will have its own standards and variations. Do we think of, in that context, thinking of building up a centralized organization which will take care of the operational standards for implementing this process or meeting the mass market?
Look, please down. You know, RTGS has already come, centralized system, NEFT is there, and the regulator yesterday pointed out, RBI governor, that payment and settlement system, the RBI is focusing a lot for centralization of too many activities. So time is ripe for that. We are shortly going for all those things. Next question. Only question, please.
Yeah.
No other background.
Yeah, I picked up two themes from the panelists, one being capital being constrained and risk transfer is a challenge. I work for a company called IMGC, which is the first mortgage guarantee company of India. And mortgage guarantee as a product brings in these two things into the system, in a banking system. My question to the panel is, how do you prepare the organization to adopt and evaluate products like this faster in a better ways?
If you had seen, when we first introduced ATM, then neither the staff was prepared for it nor the customers. I remember when the first ATM was established, people came thronging in and they were asking how many people are sitting behind the ATM and dispensing cash. So that was the attitude that was prevailing. But now you see, the 10 years, there are breathtaking changes. The institutions are changing a lot. The mindset is getting changed. The attitudes are different now. And I think it is evolving, and it will evolve further also in the days to come.
I just add to, I think your specific question was, how would a product like the one which your company is promoting, basically loan guarantee, how would it fit in with the current environment? I think it would be a good addition to the range of products which are available in India, because loan guarantee of the kind that you are mentioning would tend to reduce the risk-weighted assets of banks and all that, and would therefore bring down the capital cost. So to that extent, I think it would be a welcome addition to the repertoire of products that exist in India. Yeah?
Sir, number one, I must compliment Mr. Dubey for the best time, and this is one of the best sessions. So, sir, my question to Mr. Vaidyanathan, and my remark, not question. Sir, by and large, whatever you say, rich and poor customer, when we were also in the bank, when the token system was there, I don't think there was any difference in the bank, when the nationalized bank, whether rich and poor come, cashier will not able to see who is the customer and who is the client, and there will be hardly any time on the ledger for anybody to see. So I think probably this is not that only computers can and the internet don't distinguish, including the bank employees by and large, or they are not distinguishing between the client. And second to Mr. Raghavan, sir, this 12% you were telling saving is in the cash. Is there any idea how to bring it to the banking channel?
That is precisely when RBI deregulated the interest rates for savings bank.
Excuse me.
In fact, just
when
before...
they deregulated the interest rate for savings bank, they virtually said this is for enabling the household savings which is held in cash to flow into the market. So we have to innovate on this. We have to, ultimately it will be the aim of the banks to take out this and plus also convert the physical savings into financial savings.
Yes, sir.
Yeah. Would you like to react?
I want to react to that one quickly, 1 minute. Maybe you did not differentiate, but I'm telling you, you are already differentiating now. I am dealing with one public sector bank with whom I have a relationship. He comes to my office and says, sir, I don't want to close your account. You are very important to us. Why is he doing this? 5 years ago, he did not do this, I'm sure. So the public sector system is already changing, you're already differentiating, and I can tell you, if you don't differentiate, then the best customers will not come to you. So physical world is differentiating, at least psychologically, whether we know it or not. And technology is the only one that does not differentiate.
Thank you.
In the public sector, we have a concept called a cabin customer.
See?
Customer never gets into the counter at all. He straight away walks into the manager cabin, manager runs around and get the work done.
There you go, it's happening.
Yes.
Yeah.
Very good. Well said.
Thank you, Mr.
Yeah.
Vaidyanathan. You made the public sector banks very happy today because you said you are their fans, and rightly said what you said just now is that it does make a difference. Attire does make a difference because if you are using the ATM or using the internet, then the customer is not in eye to eye with the bank. Anyway. And thank you, Mr. Hargopal. Also, you said that, this people of this today are very tech savvy and they are, but at the same time, the customers which are banking with the PSUs for the times to come, they are still, the loyal customers. And one thing I would like to ask Mr. Vaidyanathan, the mantra for success for his company. Your company is doing very well. Your balance sheet was excellent. We would like to know if you can tell us the mantra for success.
No, I have,
for detail.
No, thank you. But I've taken a principled call not to talk about my company. It would mean amount to promotion. I'd leave it at that. But all I can say is that since we are a foreign-funded firm, it's an entrepreneurship funded by foreign equity, we are conscious about the fact that, okay, we need to create returns, we need to be stable, and we need to grow. So I'd leave it at that. And maybe we'll talk about it. One comment Mr. Dubey had asked me very early in the beginning, why is NPA of the public sector system different than the private sector system? It deserves a very deep thought and answer, right? My experience is it is not that the underwriting of the PSU system is lax. People think so. People think there is political interference. Maybe there is, I don't know. It happens probably. Maybe there are other issues also, but it's not that. It's also not economy, because economy is a common problem for public sector, private sector, right? Why? From my experience, I'm seeing, not only my experience, my general observation is that private banks and foreign banks fund organizations after they have reached a certain scale of operation, and then they're entering the game, while public sector banks are actually fostering entrepreneurship in the country. They are funding early stage. In fact, in our company, talked about our company, first banker, okay, Central Bank of India. It comes from there. Then when you become 8,000 crores, then private sector banks want it. When I become 25,000 crores, then foreign banks will come in. So because of this, everybody at the project financing stage, public sector, and therefore when you talk about the growth of the country, somewhere this is playing a role, and therefore this should be somewhere recognized in the system as to why the NPA system is different. I really strongly feel about it.
Thank you.
Thank you. Thank you.
Any last question from that side? One last question from that. Yeah, Mike, please. This is the last question, please. Yeah.
Executive Director Bank of Maharashtra was telling that technology, we have implemented technology as a part of compliance, not as a part of cost saving, whether it is a TBC or subsequently core banking solution, everything was only. Now is the time to look at the cost and see how the cost savings can be affected, per transaction cost can be reduced and all that. Subsequently, Mr. Vaidyanathan was telling about the challenges that are being faced today in the public sector banks, especially when new banks are coming into picture. So which should take first? We should see the cost, rectify, reduce the cost, and then go for mass banking. Or we should go mass banking irrespective of the cost, and then simultaneously we should try for reducing the cost.
That's what I was telling. Let us not look at it as a cost reduction strategy. Let us make it as a profit making strategy. Customer is not a cost. Customer is a profit. Once you identify he is a profit center, we know how to serve him. I said POS machine will be the right thing to make him a profit center.
Thank you very much.
Sir, I would like to ask a question. I was waiting for Mike. Two feedbacks, one positive and one maybe negative. I would like to share this distinguished volume. One positive feedback is that IBA chairman knows it, that most of the public sector banks, they are working very hard, everything, but they are credited with one or other very good thing. Like this host of this year, Bank of India is credited with opening first ever fully computerized branch in 1988 with ATM in Mahalakshmi. So similarly, many other public sector banks are also credited one or the other such things. So I would request IBA chairman to highlight such good things also. And second thing which I can say is a little negative, business correspondent model, much talked about, that was being discussed some time back in this panel. So my feedback is that in most of the 618 districts of country, the mega payment of business correspondents is not being paid in time. I believe that most of the distinguished panel members are aware of that. Moreover, I am aware that most of the banks have worked on this problem, including Bank of the Chairman, I know. And some of the banks are yet to work. So can a general suggestion be made how to keep the self-motivation of the business correspondents to work in this channel? Thank you.
We'll address your suggestion. Thank you very much. Perhaps you want to say public sector banks work hard, but they need to work smart. Well, thank you very much. Thank you, the audience. Thank you, my dear panelists, for a wonderful session. We have really made a good beginning, but this needs to be furthered by a holistic approach. Clearly, the focus has to be on technology, infrastructure, marketing, and human resources. This situation reminds me of Robert Frost's moving word. The woods are lovely, dark and deep, but we have promises to keep and miles to go before we sleep. Thank you very much.